All right, this is the weekly supplementary video for the AgriTalk Monday afternoon radio show that I'm on for a few minutes every Monday afternoon. And I always cover usually three markets. This week, and actually, by the way, I did record this on Sunday, September 20th, the day before the show, because I know I'm going to be covering in this show December corn, October feeder cattle, and December cotton. And I'll be showing charts for each. This, if you've been following my analysis for the last number of weeks or months, is a representation of support that the market now finds itself above. It was resistance, 364 and a quarter. If you follow this chart, it's a 15-year monthly channel bottom that the market actually held first time in 2016, and then at least another 3 or 4 attempts over the following a couple of years. We got a nice bounce here last summer, the summer of 19, and then the market proceeded by last March to close below this formation, which at that point in time shifted my analysis from stable to bullish into 2020 to bearish, or into later 2020 to bearish. And I'd been holding a bearish perspective, opinion on this market, since March, since the sell-off and settlement below it, until the present month we find ourselves in, which is September of 2020, where we did push through and settle a week above it. We've yet to settle the month above it, but this same chart does show up in the weekly continuation chart, so I think it's a go with. In other words, having settled back above 364 and a quarter, the market has rejected essentially a long-term sell signal, and in the process, I say that long-term signals have longer-term consequences. So this rejection of a long-term sell signal that I was expecting to play out well into this year and into 2021, in fact, I'm now off that. And not only does it neutralize market momentum, but the broader corn futures market should continue higher as we push into later 2020 and even into spring, summer of 2021. This so long as we continue placing weekly and monthly settlements, of course, above this 364 and a quarter long-term channel bottom, which is rising about a cent every month. What are the upward targets? And let's jump into that right now. I've been saying on the show that over the coming months, spring, summer of 2021, we can push into the 460s now. This is a weekly chart, by the way, no longer a monthly. And so it's a weekly continuation chart presently reflecting the DS20 contract. We have overhead resistance right now that we're approaching at 382 and a quarter. That's likely to be tested the week of Monday, September 21st. It can contain weekly buying pressures, and I say in my newsletters, possibly into October trade from 382 and a quarter, the market could quite easily fall back to this 364 and a quarter long-term support level. But holding above this long-term support level, I do think the low $4 area is likely. In my newsletters, I show that the December contract itself has meaningful resistance around 401 even, and then the weekly chart itself, the weekly continuation chart, does show a 5/8 Fibonacci retracement also in the low $4 area at 407 and a quarter, which is a 5/8 from the 2019 high to the recent April low here in 2020. And so this low $4 area is the one that's my initial target, and by initial I mean long-term 2 to 3 month objective. I've been saying that it's in reach actually by December expiration. And in fact, if we close this week, Friday, above 382 and a quarter December contract, then I think we're only a few 2 to 3, 3 to 5 weeks away from actually pushing into this targeted low $4 area where the broader corn market can top out through the rest of the year and perhaps even through winter, which is to say into January, February, and March of 2021. But ultimately, I have an eye for the 460s, and closing above 407 and a quarter at the end of any week should then yield this 465 half level within 2 to 3, 3 to 5 more months or so, where I might add the broader corn market can top out through 2021. Now, I will say, of course, that if we close the week and certainly the month, which is the following week. If we close the week of Monday, September 21st, back below 364 and a quarter, that is not a good sign for bullish continuation. And then if we follow the month, which is later the following week, October 1st, I think, is on a Thursday. If we settle the previous day, the final day of September, below 364 and a quarter, well, then I'm back to expecting I've got the 324 half objective over the following month or two, but we're not there. Corn, bottom line, remains constructive into 2021 above 364 and a quarter. I said a lot there about corn. This is getting long-winded. I apologize. On to feeder cattle. October feeder cattle. This is a feeder cattle weekly continuation chart. Volume-based rollover presently reflects October. Will soon reflect November. These price points that you see here, the November contract will inherit. Now, if you come back here, you see that we have got this channel top that we did finally settle above the week of Monday, June 20th. That was a couple of months ago, a little more. We got a nice rally, and since then we've given some back here since the early August high. But we're holding support at 139.52 and holding above 139.52, rising every week. This market should continue on to the ultimate target, which has been a 2 to 3 month target for the last 2 to 3 months at 156.20. This remains an objective above this channel top, which is well below the market now in the lower 120s. But holding above 139.52, we can regain market momentum and push on to 156.20 over the next, I'm going to say by the end of November, where the broader feeder cattle market can top out well into 2021. Now, if we close the week, Friday, below 139.52, then this low to mid 120s becomes a realistic, I say, 3 to 5 week, 1 to 2 month, something like that. Say between now and the end of November, we can fall back into this one. Let's just call it 122.22. I'll show you right here. It's kind of the blown up version, closing below 139.52, 3 to 5, 5 to 8 weeks. The lower 120s where the broader feeder cattle market can bottom out through winter trade. We would then be off, I might say, this target. Wrong chart. This target. We would be off the 156.20 target for the time being. It's still there, sort of shouting out, here's the big picture ceiling through 2021. But nearer term, between now and the end of the year, if we close below 139.52, the market merely continues falling back into the lower 120s. And let's move on finally to cotton. I've got 4 charts here to show you. Last week, the reason I'm showing you cotton is after testing this area for the last month and a half, it did eke out a settlement above this long-term channel top that this week is at 64.69. And the 64.69 level is a base of support above which we should continue higher into the 72 handle over the next 3 to 5 weeks. And in fact, I might add, I'm seeing this as a possible long-term objective. I know that's far-fetched at this point in time, but this is a longer-term structure that, having settled above, this market can, this upward momentum will remain intact and continue higher, I believe. I have Fibonacci retracement levels. I've got other things going on all the way up, but I'm just showing you what I consider to be what you should prepare for is a longer term, say 1 year target, 8 to 12 months or so into the 92 handle. My newsletter does put out, I have a daily cotton letter that does put out key resistance areas all the way up, channel top, so forth and so on. I'm not going to get into that right now. Let's talk downside. If we close the week back below 64.69, then the market should continue to what is a convergence between this intermediate channel top and this channel bottom. And it would take a couple of weeks, 2 to 3 weeks, but we've got 62 even. This area merges the first week of October. And so how do I frame this? We are bullish through the rest of the year and well into next above 64.69. And we really don't turn bearish aggressively until or unless the market settles below this convergent zone, which I'll be watching closely in the coming weeks, that in the event we settle back below 64.69 at the end of this week, the week of Monday, September 21st, then we should continue south into this lower, this lower 62 handle area where we could actually bottom out through the rest of the year and then continue higher. It's because you have this intermediate channel top as well that is a valid buy signal from about a month ago in and of itself, but waiting for the final shoe to drop, which did last week above 64.69. So bullish above 64.69 into 2021 and bearish below 62 even into early 2021. If we were to close below these lower formations in the coming weeks, then I think a retest of this long-term monthly trend line, which we did test last March and April. We dipped below it on an intra-month basis, but we never closed any week or any month below this trend line. And it is a base of support that would be kind of a 3 to 5 month objective if we settle below that 62 even area I showed you in the previous chart. 50-90 rising ever so gradually, able to absorb selling through 2021. I've said a lot. This has gone on for at least 10 minutes, I believe. And that's really all that needs to be said for this week's. There we go, 10 minutes and 40 seconds. Thanks for sticking with it. Take advantage of any free trial offer you see. I offer 2 weeks, no obligation, no question, no credit card. I don't hit you over the head with sales calls. You probably hear from me once. I do make myself available for consultation. And that is all I've got for this week's AgriTalk video. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.